Hey everyone, and welcome back to the channel. If you've ever wondered what Forex trading is, how it works, and why it's such a big deal in the financial world, then this video is for you. Today, we're breaking down Forex trading in a simple, easy to understand way. So grab a coffee, hit that like button, and let's dive in. Forex, short for foreign exchange, is the process of buying and selling currencies. It's how businesses, institutions, governments, and even you exchange one currency for another. But Forex trading isn't just for exchanging money on holiday. It's also a global financial market where people trade currencies with the aim of making a profit. This market is called the Forex market, or simply FX. It operates 24 hours a day, 5 days a week. And it's the largest and most liquid financial market in the world, with over $7.5 trillion traded daily. That's right, trillions, every single day. So how does Forex trading actually work? At its core, Forex trading is all about speculating whether the price of one currency will rise or fall against another. Currencies are traded in pairs, like the euro to the US dollar, British pound to the Japanese yen, or US dollar to the South African rand. Let's take Euro USD as an example. This pair represents the value of the euro compared to the US dollar. Simply, if you believe the euro will rise against the dollar, you buy the pair. If you believe the euro will fall, you sell it. When your prediction is right, you make a profit. If not, you take a loss. It's that simple in theory. But of course, the market is influenced by a ton of different factors, which we'll touch on shortly. Forex trading isn't just done by individual traders like you or me. In fact, the majority of Forex transactions are made by big players such as central banks, commercial banks, multinational corporations, or even investment firms and hedge funds. But thanks to the internet and modern trading platforms, retail traders, everyday people, can now access the market using a computer or even a smartphone. All you need is a trading account with a broker, and you can start trading the global currency markets from anywhere in the world. This accessibility is one reason why Forex trading has become so popular over the past decade. Now let's talk about what makes the Forex market unique. Firstly, it's decentralized. There's no central exchange like the stock market. Instead, Forex is traded over the counter, or OTC, through a global network of banks and financial institutions. It's also open 24 hours a day. Thanks to global time zones, Forex trading starts in Sydney, moves to Tokyo, then London, and ends in New York. That means the market is open 24 hours a day, 5 days a week. It's also a highly liquid market, with so much money moving through the market. You can buy or sell almost any major currency at any time, without worrying about finding a buyer or seller. Forex brokers also often offer leverage, allowing you to control larger trades with a smaller amount of capital. For example, with 1 to 100 leverage, $100 can control a $10,000 position. But be careful, leverage can magnify profits and losses. Finally, the lower costs and barrier to entry. Most Forex brokers don't charge commissions. Instead, they make money through the spread, which is the small difference between the buying and selling price of a currency pair. So, the next question, what causes currency prices to rise and fall? Several factors influence the Forex market. These include, but are not limited to, economic indicators like GDP, inflation, and employment numbers, central bank decisions such as interest rate changes, political events like elections or geopolitical tensions. Factors such as market sentiment can also play a significant role in currency changes, which is primarily driven by news, speculation, and even trader psychology. In order to mitigate some of these effects, traders use a combination of technical analysis, which could involve looking and researching various price charts, and fundamental analysis, such as analyzing economic news changes to try and predict where prices might go next. Let's be real, Forex trading isn't a guaranteed way to get rich. It involves real financial risk. The market can be volatile and prices can move fast, especially during major news events. Plus, using high leverage means you can lose more than you invested if you're not careful. That's why risk management is crucial. Things like stop-loss orders, only risking a small percentage of your capital per trade, and having a clear strategy can help protect you. Forex trading isn't gambling, it's a skill. And like any skill, it takes time, education, and practice to become successful. Interested in getting started with trading? Here are a few steps that you can use to get started. Firstly, research and education is key. Educate yourself by learning the basics of Forex, strategies, and how the market works. You also would certainly only want to trade with a regulated broker. Pick a reliable broker that's regulated and offers a user-friendly trading platform. After you have chosen a preferred, regulated, and reputable broker, consider opening a demo account. These accounts provide traders with a risk-free platform and virtual funds to practice trading and to get comfortable with the platform's functionality. Next, develop your own trading plan to help decide when and how you'll trade, your risk tolerance, and goals. Many Forex brokers and online platforms provide a vast number of educational resources you can use to understand and better educate yourself about trading and the markets. Some of these educational resources include how you can read charts, understand various analytical techniques, beginner's guides, how to trade with the brokers' platforms, and more. You can join webinars, seminars, and even listen to podcasts which many Forex brokers do provide. Consider joining courses or watching videos like this one. At SA Shares, we provide a variety of broker reviews on our channel and our website, covering most, if not all, of the reputable brokers out there, so be sure to check them out. Links will be provided in the description. Once you have educated yourself with the basics, chosen a reliable brokerage firm, and developed your plan, consider only starting small when you go live. Start with small amounts of capital and grow as your skills improve. Remember, success in Forex trading doesn't happen overnight, but with the right mindset and tools, it is possible. So that's a wrap on Forex Trading 101. The rest will be up to you. Remember, start small. Risk only what you can afford to lose. Do thorough research, and don't forget that practice makes perfect. Thanks for watching. I hope this video helped you understand the basics of Forex trading and how the market operates. If you found it helpful, make sure to give it a thumbs up and share it with anyone else who's curious about Forex. Don't forget to subscribe for more easy to understand content on trading, investing, and financial literacy. If you have any questions or topics you'd like to see covered, drop a comment below. I'd love to hear from you. Until next time, stay informed, trade smart, keep learning, and I'll see you in the next video.